Hello, good morning, and happy Friday to everyone in the house. I'm so excited to be here with you this morning. All right, so sorry for the technical issues at the start of the session, as I was having some internet issues, which I tried to sort out, and I think things are fine right now. So let me know if you can see my screen and you can hear my voice clearly without any distortion by typing hi in the comment section, as this will give me a positive feedback that we are good to go this morning. And it will also help me know that we're on the same page here. So let me see some comment, please. If you can see my screen, you can hear my voice clearly, let me know in the comment section by typing hi. Okay, I think I have a handful of comments here. 818, good morning. Thank you very much. Jeremy, good morning to you. Jeremy, thank you. All right. I'm Annette, thank you very much. 964. Thank you very much. And Valerie, good morning to you. Thank you very much for that one. 1134, good morning to you. Hey, Carrie, good morning to you. Thank you very much for that one. All right, so I'll take this as a positive confirmation that we are good to go this morning. And it's on this note I welcome you all to yet another promising session on the Extreme Speed Live. My own name is Sheriff Daramola, and for the next 1 hour, I'm going to be your host as we are going to be diving into the market structures into the financial market to identify technical parameters that we are going to be using to guide our trading activities for today. And for today being Friday, the last trading day of the week, there are some peculiarities about this kind of trading day as regards to majority will want to be doing some profit taking activity, especially after taking a very profitable position since the beginning of the week. And as a result of this, there is a high chance that we start seeing price action move in the opposite direction of where it was going since the beginning of the week today. So we are going to be taking this into consideration while we review our current position and at the same time get ready for the New York session today. And for those who are joining us for the first time, you are highly welcome. So this is what we do on a daily basis, 10 a.m. UTC, 11 a.m. West African time, as we come here to review all the instruments that we have been monitoring since the beginning of the week and prepare ourselves ahead of the New York session. So once again, you are all welcome, and on that note, let's dive right into the business for today. So the first thing we are going to be doing here is to check the economic calendar, of course. We want to see what majority in the market will be looking forward to, and this will also help us to be able to position ourselves in such a way that we can catch, in fact, use that event to be able to catch potential opportunities ahead, during and after this event. So the US dollar has been relatively quiet after gaining quite some momentum in the last 24 hours this morning, and we have been seeing majority looking forward to, we have been seeing structures that looks like an anticipation of a major event coming in today. And on the economic calendar for Friday, May 26, I have a handful of economic features coming in from the US docket that we want to be monitoring for the week, for today rather. And one thing I did differently today is to tweak my filter here to include the medium impact event. And the reason why I have chosen the medium impact event is for us to be able to capture the personal consumption expenditure price index, which is coming up later today, and that is about 2 hours from now. This is going to be coming in, And this is a significant indicator of inflation, as a high reading is always seen as bullish for the US dollar, while a low reading is seen as bearish. And one thing about this event is that the Fed Reserve will also be looking at this one too closely to see what the data is going to be, as it will be a major determinant of the interest rate decision coming up next month. So we have a previous data here at 0.3%. That is for the month-on-month. And we have a consensus projection of 0.3%. So majority are thinking that there is really no difference from what we had during the previous month of March. So let's see what the actual data is going to be like for the PCE price index event coming up later today. Then we have an high impact event also coming up that same time, and that is the durable goods order, which is always released by the US Census Bureau. And this index measures the cost of orders received by manufacturers for durable goods order. This means goods can last for 3 years or more, such as motor vehicles and appliances. This is a very sensitive data, as it gives us an insight into the health of the US economy. So we want to be looking forward to this one too. And we have a previous data here at 3.2%. And we have a consensus projection of minus 1%, which is a sign that majority are thinking that there has been a contraction in the last month. So we want to see what really the actual data is going to be like, and that's coming up in about 2 hours from now. Then we also have the durable goods order, which excludes the defense sector. And this is another very, very important event, which also gives us an insight into the manufacturing sector in the US. And the previous data here is 3.4%. So we have a consensus projection of 0.1%, which is not on the positive side too as well. So we might likely be seeing some bearish momentum on the US dollar, but we are not going to be jumping into conclusion yet, as we want to see what the market structures are really saying in anticipation of this event. So these are what we are going to be looking at as regards to a very important event to look forward to today. So with that being said here, let's dive right into the business. And as usual, the first commodity we are going to be looking at this morning is the US oil spot. On the US oil spot this week, it has been quite profitable for us this week. We had moments where we bought and we had moments where we sold and made some profit on this one. In fact, congratulations to everyone who has been part of this profitable journey on the US oil spot. So let's look at what happened at the beginning of the week that incited the decisions we made during the course of the week. So the week started with a choppy situation where we saw price action trading between the $71.85 level and the $70.65 area to give us an indecision phase during the first 12 hours of the week. And you know how we do it whenever we have this kind of simple setup. We want to see price action give us a signal in the form of either a breakout of the resistance line for buying opportunity or breakdown of the support line for selling opportunities. And with the situation we had here, we had our buy stops and sell stop order placed appropriately, but at no point did we see the sell stop order triggered at the breakdown of the 70.65. So what we saw here instead was price action breaking out of the $71.85 area to trigger our first buy position for the week. And it was at this point we knew that we are going to be buying the US oil spot at least for the first half of the week. Then we continue to add more positions to our existing trade as price action broke out of key levels like the $72.50 area, and also we had another position at the $73.50 level. However, on Wednesday's trading during our Wednesday live session, we acknowledged the fact that price action has been choppy for the last 24 hours, where we saw this choppy situation between the $74.40 area and the $73.50 level, which was a sign that sellers might likely be coming in as we had a reversal pattern around that area. And one thing we said here on Wednesday is that if we are going to be selling the US oil spot, we would want to see price action break down this potential neckline, which we identified at the $73 level. And if you go to as far back as last week's trading session, we saw how that level had been a strong selling niche in this market. So we agreed here that if price action breaks down both that $73.50 level and this bullish trend line, which has been supporting that bullish momentum since the beginning of the week, we want to be getting ready to sell the US oil spot. So we saw the breakdown of the structure, and in fact, if you had missed out on that opportunity, the market gave us another chance to join the move and it came back to retest that structure. And since then, price action dropped to the downside, and in fact, we had on the first position, we had a situation where price moved about 250 pips in our favor. And the second position, which we projected during our live session yesterday, we said we are going to be looking forward to the breakdown, retest of the $72.50 level to add more position to our existing trade. And this moved about 150 pips as well. So we had price action moved a total of 400 pips in our favor on that bearish note. And I do hope you moved your stop loss accordingly to secure the position before the buy pressure came in to take us out of all position. So well done to everyone who had been part of this profitable trade. Now that we have this all sorted out, what is going to be our plans for today? How do we intend to take advantage of a trading opportunity during the New York session today? Now, if we look at the current structure here, let's take an holistic view of what has been going on in this market in the last 1 week. And if you look at things closely here, it is important to note here that we have a consolidation phase between the $73.50 level and that our key level, which we identified at the beginning of the week, just exactly around the $71.50 level. And if you notice what has been happening around this area since the beginning of the week, you will see that the $71.50 area, which happens to be our key level for the week, turned out to be a very strong demand zone throughout the course of the week, as you saw here that every attempt by the sellers to break down the structure was met with strong resistance from the buyers, thereby negating all attempts by the sellers to break down that structure. And interestingly enough, what happened here during the New York session yesterday, despite the strong impulsive bearish move to the downside, as you can see here, we saw that as soon as price action got into that $71.50 level, where we said is a strong has a strong memory for buying power, we saw buy pressure resume around this area, leading into a structure here that looks more like a reversal pattern in the form of a double bottom structure. And this was what I was able to spot during the early hours of today. And what I did here, you know how we do it whenever we have this potential reversal pattern. The next thing we want to be doing is to identify the neckline of that reversal pattern, which definitely we are going to be using to guide our trading activity going forward. So we had a neckline sitting at the $72 area, which has also been a major determinant of price action in the last 24 hours. Now, a breakout retest of this level is the sign we are looking out for to buy the US oil spot for today, which has already happened. We saw the breakout, price action came back to retest the structure, and it was at this point I had my buy position triggered for today. And I'm currently running with about a 50 pips in profit at this point. And for those who took advantage of this opportunity, well done to you for being on standby to catch that one. But if you had missed out on that opportunity, well, let's see if the market is going to present us with another chance to add more position to our existing trade. Now, for us to position ourselves for the buy position here, I already have a trend line, which after we connected a series of higher lows here, we have a trend line. And definitely this trend line is going to be our yardstick for today. And what this simply means is that as long as price action remains above that trend line, we shall feel comfortable in our buy position and at the same time look out for more opportunities above this level. Now that we have a breakout of the neckline area at the $72 area, there is still a likelihood that price action could still come back to retest the structure, which also shares a confluence with that trend line before another wave of bullish momentum will happen. So if you had missed out on that first position, this is one scenario you want to be looking out for to see if price action will come back to retest the structure, after which we want to be looking out for buying opportunity around this area. To look out for that one, we want to scale down into our lower time frame to look out for buy pressure that will support a trend continuation to the upside. Now, what happens if price action does not drop back into the $72 area and instead it continues to find higher highs? Well, we have a key level here at the $72.50 area, which has been a major determinant of price action since the beginning of the week. So if price does not drop back into the $72 area and instead it continues to find higher highs, then we are going to be using this level to guide our move to the upside. So what we want to see here is price action breaking out of that structure, and if possible, we see a retest of that level to incite another wave to the upside. So there are two ways in which we can take advantage of a buy position above the $72.50 level, and one of which is having a buy stop order above that structure. Now, if you are going to be having a buy stop order above that structure, you are going to be having a wide stop loss. And that stop loss is going to be situated just right below the trend line. So it could be dovetailing to about 60 to 65 pip stop loss. So you need to check your portfolio to know if your portfolio can afford this huge stop loss at this point. So having a buy stop order needs some confirmation to happen. Actually. So the reason why we are going to be having a wide stop loss is simply because if a breakout happens, there is a likelihood that price action could still retrace back into that trend line before another wave happens. So in that regard, we want to have a buy stop order below the trend line so that it can give room for price action to breathe, with the hopes that price action will retrace to incite another wave of bullish momentum. Then another way we can take advantage of an opportunity above the $72.50 level, if you are a cautious trader, you want to wait for price action to break out of structure. Then we scale down into our lower time frame to look out for retest of this level. That is, we start seeing buy pressure, inability of price action to break out of that area to join another wave. And if it does happen that price action breaks down the structure, then we want to wait at this bus stop here along the trend line, which also shares a confluence with the $72 level, to look out for buying pressure that will support the trend continuation to the upside. So this is how we are going to be buying the US oil spot for today. So like I said, we have two scenarios here. The first one is if you can afford about 60 to 65 pip stop loss, you can have a buy stop order just right above this area. Have your stop loss somewhere below the trend line here, just below the $72 area. Then let's see how far that will go. Or you could wait for price action to break out of the $72.50 level, then wait for price action to retrace and see how far the retracement phase is going to go before we look out for opportunities to buy. So it could retrace back into the 72, or it could even go as far as the $72 area before that wave will happen. So these are the ways we are going to be looking out for buying opportunity on the US oil spot for today. Now, in as much as we are looking out for buying opportunity in this market, we are also going to be considering the potentials that the sellers have in this market. Now, if we consider the impulsive bearish move that started yesterday, there is a high chance that sellers could still break through the structure to incite a trend continuation to the downside. And if that is going to be happening, what are we going to be seeing on this chart that will give us the confidence to open a sell position in this market? Now, remember, we identified a trend line earlier, which has been supporting this bullish momentum in the last 18 hours or so. I think 24 hours, it has been supporting that bullish momentum. So what we are going to be seeing here for us to sell the US oil spot is to see price action breach that trend line, breaking that trend line to the downside. And once we have a breakdown of that trend line, at this point we want to start getting ready to be part of a bearish move. But we are not going to be getting too excited at this point. We need some confirmation to happen. So we are not having a sell stop order at this structure, as we need confirmation which would reflect on the chart as price action doing a retest of the structure that was broken. So price could retest the trend line or even retest the $72 area. But most importantly, we want to start seeing selling pressure where buyers find it difficult to climb back above the trend line. And if this happens, we want to sell at the site of a reversal pattern, then have a sell stop order below the $71.50 level to get ready to add more position to our existing trade. So this is how we are going to be trading the US oil spot today. And you will agree with me that both the trend line here and the neckline at the $72 area is going to be serving as our yardstick that will guide our trading activity for today. And to give a simple background knowledge of what we talked about so far, as long as price action remain above these identified structures, we look out for buying opportunity, and if price action break down the structures, we look out for selling opportunities. So this is how we are going to be trading the US oil spot for today. So I hope that we'll be on standby to catch any of these opportunities that will be happening. And for those who are taking advantage of the buy position here at the $72 area, you want to be moving your stop loss right now to your entry point to secure the current position. And let's wait out and see how price action will be reacting to the $72.50 level, which definitely will be giving us an insight if we are going to be buying or selling at that point. So that is that on the US oil spot. If you have any questions, feel free to let me know in the comment section. All right, so moving on to the next option this morning. So the next option we are going to be taking this morning is the US Tech 100. So on the US Tech 100, this is also a profitable trade for us. We have been profitable this week on the US Tech 100. So far, so good. And let's look at how the week started for us on the US Tech 100, and let's see what incited the decisions that we made on this option. So at the beginning of the week, we were able to identify this channel where price action was initially ranging between the 13,825 level and the 13,745 area during the first 12 to 13 hours of the week. And you all know how we do it whenever we have this kind of simple flat channel. We want to see price action either break down the structure to give us a selling opportunity or break out of the resistant line to give us a buy opportunity. And the latter was what happened here on Monday, as we saw price action break out of that structure a couple of hours into the New York session to give us our first buy position. And we saw how price action moved about 90 to 100 pips in our favor before this whole bearish momentum began. And right here on Tuesday, during our live session on Tuesday, we acknowledged the fact that price action had continued to find lower highs in this market, and coupled with the fact that we had a bullish trend line here, we were using this to guide our trading activity. And one thing we agreed here on Tuesday is that if price action breaks down that trend line, we shall be looking out for selling opportunities. So we saw price action break down the trend line, did a retest of that structure which triggered our sell position, and at this point we had a sell position where price action moved over 300 pips in our direction before the bullish momentum began. And remember, we also had multiple entries here where we had structures like the key level at the 13,780, which welcomed more sell positions. We had a 13,745 broken to the downside, and we also had a 13,675 hereby maximizing the bearish potential in that market. And during our Wednesday live session, we acknowledged that this trend line here will now be our new yardstick following the new lower highs we identified here. Then we also said here that if price action breaks out of that trend line, then we shall be looking out for buying opportunity. So we identified a key level at a 13,640, which shares a confluence with that trend line, and with a buy stop order above that structure, we were able to capture this bullish move. And since then, price action had continued to find higher highs, higher lows, and at this point in time, if you still have a buy position after buying at the breakout of that structure, you currently have over 300 pips in profit at this point. So well done to everyone who had been part of this profitable journey. As you all know, we also had multiple entries too as well. Breakout of the structure yesterday, which also triggered another buy position. And from this one yesterday, we saw price is moving with about 130 pips in profit at this point. So well done to everyone who are taking advantage of this opportunity. And as we get prepared for the New York session today, the next line of action we want to be doing right now is to secure the current buy position if you still have a buy position running at this point. And the most appropriate area for you to move your stop losses to right now is an area below the 13,910 area, which has been a very strong buying niche in the last 12 hours. So after moving your stop losses below the 13,910, let's look at how we are going to be taking advantage of a trading opportunity today. And considering the fact that price action has been bullish since the beginning of the week, there is a high chance that the trend continuation could still continue. So at this point, looking at what we have here, we can see that as soon as price action tested a 13,955, we saw how price action went into a consolidation phase between this ranging between the 13,955 and the $13,910 area to give us a channel. And you know how we do it. Whenever we have this kind of channel, we want to wait for price action to either break out of the resistance line to give us buying opportunity, or break down of the support line to give us an opportunity to sell. And with this kind of situation here, considering the fact that price action has been very bullish to the upside, leading into this point, there is a high chance that this whole structure could turn out to be a trend continuation pattern in the form of a bullish rectangle, where the breakout retest of that level will be welcoming the buy position for today. So in that regard, I have a buy stop order above the 13,955 to capture this buy position if price action break out of that structure. And with the look of things right now, I already have a buy position triggered. So our stop losses should be somewhere right around the 13,910, which will be dovetailing to approximately 40 pips in that regard. So let's see how our price action is going to be moving from this point in time. And the more price go to the upside, we look out for more opportunities. And there's another thing here I would like us to put into consideration while we continue to monitor price action, as we have a level at the 13,990 area, which is the highest point price action has ever been for this week. And if price action breaks out of that level, it will be welcoming more opportunities to take advantage of a bullish momentum. So we shall be positioning ourselves again above the 13,990. So let me label that area for the sake of clarity. So we have the $13,990 area, where a breakout of that structure as well will be welcoming more opportunities in this market. So for today on the US Tech 100, we will continue to look out for more buying opportunity in this market as long as price action remains above that $13,910 area at this point. So let's hold on to a bullish bias as long as price action remain above that structure. However, we always want to ensure that we keep tabs with the opposite direction too as well. That is, we want to take consideration if sellers will likely come in at this point. So in order to be able to capture if this whole momentum we've seen so far is going to transition into a reversal pattern, we want to connect the series of higher lows since Wednesday. And to do that, we bring out our line chart and then let's connect this whole structure together. And this is going to be our yardstick to guide trading activity today. So this simply means that as long as price action remains above the trend line, we feel comfortable in our buy position while we look out for more opportunities to add to our existing position. So let me bring back my line candle chart and do some readjustment to suit in the current structure, so we have something like this. So if at any point in time this trend line is breached to the downside, that is price action breaks down the trend line to the downside, then at this point we want to be considering selling the US Tech 100. But remember, we are not getting too excited from this current structure. If price breaks down the trend line, we are going to be waiting for confirmations to happen, which would reflect on the chart as a retest of the trend line or the 13,955, where continued selling pressure below the structures on our lower time frame will give us an opportunity to sell. And if that happens, we have a sell stop order below the 13,910 area to add more position to our existing trade. So this is how we are going to be trading the US Tech 100 today. You might want to screenshot my screen so that you can use it as a reference point when you're about to make your individual decision on this option. If you do have any questions regarding what I just explained, or you need me to shed more light in whatever aspects I've just explained so far, feel free to let me know right in the comment section, and trust me, I'm willing to be of help in that regard. So in the absence of no questions, I want to assume that we're on the same page here, and let's move on to the next commodity. I think the next one is the gold. Let me quickly check and see what's the next instrument we are going to be treating. So I wanted to go in line with how we discussed it yesterday. So I want let me see. Okay, so the next one we are going to be treating is the XAUUSD. So let's run through the XAUUSD chart and let's see what has been going on in the last 1 week on this one. So on the XAUUSD, we have been quite profitable actually on the XAUUSD. So far so good this week. And the first thing we did at the beginning of the week is to acknowledge a key level, which we situated at the $1,980 area. And you know how we use our key levels. We want to see price action trade above that key level for us to buy. And if price action continues to trade below the key level, we want to look out for selling opportunities. And if you look at what has been happening in this market since the beginning of the week, you will see that at no point in time did we see price action do a significant breakout of that key level, which further emphasizes the level of seller strength in this market. And coupled with the key level, we also identified a choppy situation, which revealed that there was a level of indecision at the beginning of the week, where we saw our price action was caught within a range between the $1,982.35 level and the $1,971.50 area. And with this whole choppy situation here, you know how we do it. We want to see price action either break out of the resistance line to give us a buy opportunity, or break down the support line at the 1,971 to give us an opportunity to sell. And as you can see here, with our sell stop order below the $1,971.50 level, we had our first sell position for the week triggered. And in fact, price action moved significantly well, as we saw it move over 170 pips in our favor before the whole buy pressure began around the $1,957 area. Now, on Tuesday's trading session, right here on the Tuesday, we acknowledge the fact that price action has been consolidating around that area. And when we went to as far back as last week, Thursday, we saw that that level has a memory for buying power. And as a result of this, we wanted to position ourselves in such a way that we can catch that bullish move. And what we did here was to go down into our lower time frame to identify a simple setup that we are going to be using to guide our move to the upside. And what we were able to come up with was right on our 15 minutes time frame. And let me show you what made us to decide buying the XAUUSD on Tuesday. So we saw this whole situation here on Tuesday. We saw this impulsive move into the structure. We saw something like a reversal pattern. Then at this point that we identified this double bottom, we quickly identified the neckline area at the 1,960 and agreed here that on Tuesday's New York session, we want to see price action break out, retest that neckline to give us an opportunity to buy. And as you can see that since then, we bought at that point, added more position at the breakout of the structure to the upside, and in fact we rode that move all the way into our TP target at the 1,980, which happened to be our key level for the week. So we rode the move all the way into the structure, giving us another buy position with about I think we have about 200 pips and then 150 pips on the occasions we had there. We had about 3 positions running there. Then during our Wednesday's live session, we acknowledged this old choppy situation between this old structure here. And then we also looked out for selling opportunities if price breaks down this level, which we did. And since then, price action dropped to the downside. And during our live session yesterday, this was what we were using to guide our trading activities yesterday. So we saw this channel between the $1,964 area and the 1,957. So we had a choppy situation, an indecision phase going on around that area. And for the fact that price action was sitting on a very strong demand zone, we said here that there is a high chance that we could be having a breakout retest of the structure to join a bullish move. But unfortunately, that did not happen. But instead, we saw how price action broke down that demand zone to incite a sell-off, which we took advantage of. Remember, we had a sell stop order below the structure and price action moved over 200 pips in our favor, hitting our TP target around that area, which we identified to be our TP target for the sell move. So congratulations to everyone who had been part of this bearish move to the downside. Now that we have this whole situation figured out, what is going to be our plans as we get prepared for the New York session today? Well, if you look at this whole structure since the beginning of this week, or probably since the last trading day of last week, you would realize that price action has been caught within a channel between the 1,980 and the $1,957 area before we finally saw the breakdown of the support line of that channel here yesterday at the 1,957. And you all know how we do it whenever we have a significant breakdown of a key structure. We expect that price action is likely going to come back and retest the structure that was broken to incite another wave of bearish momentum. And if you look at what has been happening here in the last 4 hours, we saw how price action is back within the 1,957, that level which was broken to the downside yesterday, to start giving us a choppy situation around that area. And for me at this point, if continued selling pressure remains below the 1,957, we would have no other choice than to look out for selling opportunities. So if price action continues to remain below the structure and continued selling pressure below this area on our lower time frame, then we have no other choice than to look out for selling opportunities and join that decline to the downside. And how far that move is going to go, we don't know yet. It depends on how price action reacts to the 1,940 here, which also has a memory for buying power. At least in the last 24 hours, we saw how price action has been finding buy pressure around that area. So if it so breaks down that level to the downside, retest it, then we want to be adding more sell position to our existing trade. But if price action finds it difficult to break down this area and instead it transitions into a higher low, giving us something like a reversal pattern, then the 1,957 will be the neckline upon which we are going to be confirming the potency of that reversal pattern. So this is how the reversal pattern is going to look. So if we have this impulsive move into the structure, we have the neckline at the 1,957, a higher low. If that happens, then we want to join the breakout of that neckline. So that is how we are going to be joining a bullish move if price action breaks down that 1,957 level around this area. So now that price action remained trading below the 1,957 at this point, how do we intend to join a sell position from below the structure? So what I did here was to scale down a little further into the 15 minutes time frame, and right on the 15 minutes time frame I was able to identify a simple setup. So right here is the 1,957, the level which we identified on the 1 hour time frame, where we saw price action retesting the structure. And the next thing I did here is to project that this whole structure here could transition into a reversal pattern in the form of a double top structure, where price finds it difficult to break above the previous high. Then if this happens, then we want to be having our neckline at the $1,952 level. And as you can see, in the last 24 hours, this level had been a major determinant of price action. So if this continues in such a way that price is unable to break above the previous high here, then we will have no other choice than to look out for selling opportunities right below the 1,952. Now, to sell below the 1,952, we want to look out for confirmations to happen. So I want to see price action break down the 1,952, and right on our lower time frame, as soon as we have the breakdown of the 1,952, we can go down into our lower time frame to look out for confirmations which would reflect in the form of a retest of the 1,952. It could even come as far as coming to the upside, but as long as we have a breakdown of that structure, I want to be having a sell stop order below this area if price action comes back to retest to join that decline to the downside. So what this simply means is that if we can sell below the 1,952, then definitely we will be able to maximize the potential of this bearish move to the downside. As you all know, we have a structure on the 1 hour time frame where we're also going to be looking forward to selling opportunities if price breaks down that structure, and that structure here is the 1,940 level. So that means if we sell below the 1,952, we will be able to recoup over 120 pips move before the breakdown of that structure will happen. So let's see how price action will play out going forward from this current structure. So back to our 15 minutes time frame. So you can map this out on your chart so that you can be able to use this as a reference point to take advantage of this move. So let's see how price action plays out going forward. But if at any point in time price action breaks back above the 1,957 and we continue to see buy pressure above this area, then at this point we are going to be considering buying the XAUUSD. And one thing I would like to call our attention to on the XAUUSD here is that if price action breaks above the 1,957, so I'm back to the 1 hour time frame here, if price action breaks above the 1,957, remember we are going to be back into the buyer's territory. Remember, this level has been a very strong buying niche since last week's trading session, and if it so happens that price action breaks above that area, we would have no other choice than to look out for buying opportunity. And remember, we also have key structures like the 1,964, which if a breakout of that level happens, we want to be adding more position to our existing trade. Now look at this old structure here. Remember, we have a trend line here which has been guiding our bearish momentum since the beginning of the week. So a breakout of this trend line also is an opportunity for us to feel confident in our buy position. So let's see how this plays out. So our center of focus for today is that area between the 1,957 and the 1,952, which definitely whatever happens here will be helping us to decide if we are going to be buying or selling. So let's keep this in mind. Mark this out on your chart, or you might want to screenshot my screen so that you can use it as a reference point when you're about to make your individual decision on this commodity. So if you have any questions regarding what I just explained here, feel free to let me know in the comment section, and trust me, I am willing to be of help. I think I have a handful of comments here, so let's go through this quickly before we move on to the next pair. Okay, so I can see HJPY. All right, you say BB. I'm not sure what that means. And okay, I see you again, XRP. Okay, we shall treat XRP today. I wasn't able to treat it yesterday, so I will try as much as possible to treat the XRP today to fulfill your desires. And I hope you will stay tuned until the end of the session so that you don't miss out on that one. Sincerely, I don't know how to pronounce your name. If you can help me write it out in English alphabet, I would really appreciate that so that I can get to pronounce your name appropriately when I'm calling out your name, please. All right, thank you. Okay, X8603, good morning to you. Glad to have you around. Trust you are doing well. All right, so in the absence of no questions, I want to assume that we are on the same page. So I will be moving on to the next pair, and the next pair we shall be treating is the XAGUSD, which was introduced to us by Steamroller on Monday, and since then I haven't been seeing Steamroller in the house. I've always been calling out your name, but no response in that regard. If you are around, please let me know in the comment section. So on the XAGUSD, it has been quite profitable for us on the XAGUSD since the beginning of the week, and we have been selling all the way to the downside at this point in time. Now let's look at how the week started for us and how we took advantage, what made us take advantage of a sell position in this market. So what we saw here at the beginning of was a very simple setup, of course, where we saw how price action was initially choppy, and we had a situation where price was ranging between the $23.90 level and the $23.64 area, and this was quite a good sign that we are having an indecision going on at this point. And you know how we do it whenever we have this kind of simple setup. We want to see price action either break out of the resistance line for buying opportunity or break down the support line for selling opportunity. And what we had here was quite interesting. We saw how price action broke down, triggered our sell stop order, giving us our first sell position for the week as we rode the move all the way to the downside. So as you can see here, we also had the privilege of adding more opportunities to our existing trade. We had the breakdown of the $23.50 level. We also had the breakdown of the $23.40 area as we rode the move all the way into that $23.10 area. So it was a profitable start to the week, and what we saw on Tuesday fell in line with what our expectation was. And for the fact that price action came back into the trend line with continued selling pressure below that trend line, it was a clear sign that we might likely be going for another wave of bearish move. So we positioned ourselves below the $23.40 area to take advantage of a trend continuation to the downside. And since Wednesday's New York session, we have been selling the XAGUSD all the way into that area at the $22.70 area. So it was quite a profitable week for us on the XAGUSD as price action continued to respect that trend line all the way to the downside. So congrats to everyone who has been part of this profitable trade. And right now we are going into the New York session, and what is going to be our plans? How do we intend to trade the XAGUSD, and what structures are we going to be looking out for that will be guiding our trading activity for today? Well, the first thing we want to acknowledge here is the fact that price action has been bearish since the beginning of this week, and to further emphasize the strength of the sellers here, we have the series of lower highs connected to give us a bearish trend line. And as you can see, price has consistently respected that trend line throughout the course of the week. And one interesting thing about this whole structure is that price action is back into that trend line at this point. So you would agree with me that we are at a critical point in the market here where anything could actually happen, and it will take a whole lot of patience for us to be able to capture what the potential move is going to be like from this point. So what we are going to be doing here is to see how price action will be reacting to the $23.10 area to decide what our next line of action will be. So the first thing we are going to be considering here is the potentials of sellers in this market. And if we consider the fact that price action has been bearish since the beginning of the week, of course, we want to consider sellers too as well from this area. So for us to sell, hold on a second, please, and give me a moment. I need to sort out something quickly. Give me a moment. I'll be right back. I'm sorry for the break in transmission. I had to sort out some personal things, but things are fine right now. So let's go back into the business. So what we are talking about here is that we want to see how price action will be reacting to this trend line and the $23.10 area to decide what our next line of action will be. And for the fact that that area shares a beautiful confluence with it, trend line that has been supporting this bearish momentum since the beginning of the week, we want to check out and see if we are going to be seeing at any point in time selling pressure come in from that area. And if we do see selling pressure from that area, then definitely we want to get ready for another wave of bearish momentum. So in that regard, we are going to be using the $23.10 area, which also shares a confluence with our trend line to guide any selling momentum at this point. So what I'm going to be doing here is to have this marked out here. So sell the breakdown retest of the structure. So we are going to be selling the breakdown retest to join a trend continuation to the downside if price action ever comes back down below the $23.10. And you all know if price action drops below the $23.10 level, price is back into the seller's territory, which is just right below the trend line. And you know how we do it. As long as price action remains below our trend line, we shall feel comfortable in our sell position while we look out for more opportunities to add to our existing trade. So this is how we are going to be selling the XAGUSD today. So let's be on standby to catch any of these opportunities at this point. So don't let us forget and ignore the potentials that the sellers have around this area. So we are at a critical point, so let's remain patient to wait out for structures to mature before we jump into any positions right now. So with that being said here, let's look at the potentials that the buyers do have. Now at this point, for me to buy the XAGUSD at this point, I would rather see a significant breakout of that trend line. And you see, if a breakout of that trend line happens, this will be the first time price action will significantly break out of that structure. I want to see price action break out first of all, And if price breaks out, then we scale down into our lower time frame, where we are going to be looking out for signs that bullish momentum is gradually building up around this area. And this will reflect on the chart as price action coming back to retest the trend line, which also shares a confluence with the $23.10 area to incite another wave of bullish momentum. So that is how we are going to be buying the XAGUSD today. So right now we are yet to see a breakout of the trend line, and we are yet to see price drop back below the $23.10 area. So at this point, let's remain patient. This could take about an hour or two for structures to mature before we want to be joining any position at this point. So let's keep this in mind while we continue to monitor price action. So if you have any questions regarding what I just explained so far, feel free to let me know right in the comment section. So I will be moving on to the USDJPY, and I'm already out of time actually, and I will still try to treat your BTC USD. I think you made mention. Okay, George, thank you for clarifying what your name is. So next time I see that ID, I know I call you George. All right, good morning, George. Okay, I hope you're still around, George. We are going to be treating the BTC USD after the USDJPY. So here we go on the USDJPY, and we are right on the 1 hour time frame on the USDJPY. And on the USDJPY, we have been buying this instrument since the beginning of the week. And what made us to buy the USDJPY, and what are the structures we saw that supported the idea of buying the USDJPY? So at the beginning of the week, I hope you can see my screen clearly, please. So at the beginning of the week, we acknowledged that there was a level of indecision where price action was ranging between the 138.00 and the 137.00 area for the first 10 to 15 hours for the week. And you know how we do it. Whenever we have this kind of simple flat channel, we want to see price action either break out of the resistance line to give us an opportunity to buy, or a breakdown of the support line for an opportunity to sell. We had our sell stop order below the 137.500, and we had our resistance line marked out with a buy stop order. But at no point did we see price action drop below the 137 to trigger any sell position, but instead we saw price action break out of the resistance line at the 138.00 area to trigger our first buy position for the week. And we continue to ride the move all the way to the upside. In fact, we had about 70 pips move here before this old choppy situation began on Tuesdays, I think during the later part of the Monday session, and this lasted about how many hours? That is about 48 hours. It went through from the later part of Monday session right through to the New York session on Wednesday. We had this long choppy situation where price action was caught within a range between the 138.750 and the 138.400 area. And with this whole situation, we agreed here on Tuesday and Wednesday that a breakout or breakdown will be welcoming a sell position or buy position respectively. And we had a sell position here on Tuesday actually after we saw the breakdown of the structure, but we were taken out at a loss as price action hit our stop loss here at about 35 pips stop loss at that point. And then immediately it did that. Remember on Wednesday, our morning live session on Wednesday, I told us all that we are going to be having a buy stop order above the 138.750 since price action remains above our bullish trend line. And we saw how price action triggered our buy position. That was our second buy position for the week, and price action moved significantly into our TP target at 139.700, giving us about 95 pips in profit. And during our live session yesterday, we acknowledged another choppy situation here where price action was ranging between the 139.700 and the 139.400 area. So we were looking out for another breakout of structure, which we also took advantage of here as we saw price action move significantly in our favor, moved about 55 pips before we started seeing the sell pressure began. And if you had moved your stop loss accordingly to secure your position there, you would have been taken out with at least some small profit, and at the worst case scenario, break even if that is where you moved your stop loss to. So it has been quite a profitable week for us on the USDJPY so far this week. And now that we are heading into the New York session today, what is going to be our plans? Are we still buying the USDJPY, or probably are we getting ready to sell the USDJPY? Now, if we look at the current structure we have here on the 1 hour time frame, things are looking a little bit reversal-ish, as I can see here that selling pressure continue. And if you look at the nature of the candles in the last 6-7 hours, you will see sharp rejections of structures around this area, giving us signs that sellers are gradually gaining some momentum here. And one thing I also considered here is that this is from a psychological point of view anyways, and for the fact that today is the last trading day of the week, majority who had bought at a very low price will at one point in time want to be doing some profit-taking activity, which will obviously reflect on the chart in the form of a retracement, which we don't know how far it's going to go before another wave of bullish momentum will happen. Now, if we take a closer look at what has been happening in this market in the last 24 hours, you will see that the current structure appears to be transitioning into what looks like a head and shoulder pattern, where we have the left shoulder here, we have the head right here, and we are yet to see a right shoulder at all at this point. So this is what we are going to be looking out for. Then the potential neckline of this potential reversal pattern will definitely fall around the 139.400 area. So we want to see the right shoulder form here around this area, giving us a sign that sellers are actually gaining that momentum at this juncture in the market. And if we do have a breakdown of the 139.400, as you can see, it also shares a confluence with that trend line, which has been supporting that bullish momentum since the beginning of the week. So let me highlight it for you so that you can see. So this is the trend line here. You can see out the 139.400, which might likely be a potential neckline going forward, shares a confluence with our trend line. So if it so happens the price action breaks down the 139.400, then we might likely be getting ready for another wave of sell-off in this market. So remember what we are going to be doing here. We are not having a sell stop order, and considering the fact that price action will be sitting on a strong trend line, we want to wait for confirmations to happen before we join any trade. So this will reflect on the chart as a retest of structure before we join any bearish move to the downside. And if price action gets into the structure here, and instead of breaking down, we start seeing buy pressure above the structure, then we want to get ready to buy, as price action might likely respect that trend line one more time to incite another wave of bullish momentum. So this is what we are going to be looking out for from this current structure on the USDJPY. And to make things much more clearer and easy for us to follow during the New York session today, I was able to identify a simple setup on a much more lower time frame, on the 50 minutes time frame, which we are going to be using to guide our trading activity for today. And that is the 15 minutes time frame. So let's scale down into the 15 minutes time frame, and this was what I was able to spot on the 15 minutes time frame. Now, since price action tested the 140.225, remember this is the highest point price action has gotten to this week, we saw that price action had continued to find lower highs. So please remember this is the 15 minutes time frame, and what we saw here was quite interesting. We saw lower highs, connected it together, giving us a bearish trend line to work with for today. So what this simply means is that if price action continues to trade below the trend line, then definitely there is a high chance that sellers will take over this market, hereby transitioning into that reversal pattern we identified on the higher time frame, breaking down the 139.400 to trigger a sell-off in this market. So if price remains below the trend line, we want to be seen looking out for selling opportunities at the breakdown of the 139.850. So that is how we are going to be selling the USDJPY to capture a bearish momentum early enough, even before the structure, the reversal structure we identified on the higher time frame matures. However, if price action breaks out of the trend line, then at this point we want to consider that price is going through getting ready for another wave of bullish momentum. And considering the fact that we have been on a strong bullish momentum since the beginning of this week, it is very likely that price could still maintain that momentum going forward. So as a result of this, we have a key level at the 139.820. We shall be guiding a bullish momentum going forward. So a breakout of both the trend line and the 139.820 will be welcoming a buy position, while the further breakout of the 140.225 will welcome more opportunities to buy the USDJPY. So let's be on standby to catch these opportunities. You can map this whole structure out on your chart or screenshot my screen so that you can use it as a reference point when you're about to make your individual decision. So that is that on the USDJPY for today. If you have any questions, feel free to let me know in the comment section. So George, I'm right here. Are you still around, George? Let me know in the comment section. So we are going to be going into the BTC USD right now. So let's type in the BTC USD and let's see what is really going on in this market. So we want to scale up into a higher time frame. We want to see what is going on from an holistic point of view. And I think I already have a structure marked out here. Oh, okay, sorry, it's XRP, right? Sorry about that. XRP. Okay, so we have the XRP right here. So let's scale up into the daily time frame. Let's see what is going on. Remove. Okay, so the first thing you will observe here, so what I'm going to be doing is to consider trading activity since the month of March, and when I do that, I have a higher low which we are going to be using. Then the next thing I want to do here is to identify a key level which we are going to be using to guide our trading activities going forward. And that falls exactly along the 47 cents, I think. Yes, 47 cents. And I will share with you in a moment why that is. So we have 0.47 level. So I always like my key level to be gold in color. So let me give it a golden color here. So we have a key level which will be guiding our trading activities going forward. So right now, if you look at the highest point price action has gotten to this year, which is the 0.58, I guess. 0.58, that's like 58 cents, I think. Okay, so 0.58 level. I have to differentiate this from my key level. Then when we bring out our line chart, you will see that we have a trend line which doesn't seem so we have a trend line here. So I'll make this lighter. So you can see we have been finding lower highs since price action hits that area there. We have lower heights. And the first thing you want to say here is that it is bearish, right? And you want to sell, of course. But one thing I want us to see here is that the fact that we had lower highs doesn't confirm that it's bearish, because price action has been finding higher low here. And it shows that buyers are struggling to incite a bullish momentum at this point in the market. So with a higher low here, meeting up with this lower highs, we have a beautiful confluence that we are going to be using to guide our trading activities going forward. And to capture any potential opportunities around this area, that is any bullish opportunity around this area, we want to be using that key level, which has been a major determinant of price action since the month of March. And you can see how this level was at one point in time a strong selling niche here before we saw the breakout of structure happen. It was at one point a buying niche before we saw it serve as a selling niche again. And in the last couple of weeks now, this area has been a very strong selling niche in this market, negating how bullish attempt to break out of that structure. And for me at this point, it is a sign that the only way we can buy is to see price action take out the sell positions there. By breaking out of that key level, give us some buy pressure, then we could join the rally to the upside. Now that's a long-term perspective here anyways. So we want to scale down into a much more lower time frame to see how price action has been reacting to that our key level here to decide what our next line of action will be. So if I scale down into the 4 hours time frame, let's see if we have a pattern to work with, and if we don't, we scale down more to a much more lower time frame. So I will bring this key level into the screen, so into our view, so that you don't get lost within the boundaries of our charts. And one thing, okay, since Wednesday, okay, so since the beginning of this week, we have seen that price has been choppy, ranging between the 47 cent and the 41 cent area. So let's label this area too as well. So we have it at the 0.41 cent level. Let's place it right below the structure. So you can see price has been ranging between the 0.47 and the 0.41, giving us a flat channel. But despite the fact that we have a flat channel, it shows that buyers are gradually gaining momentum. As you can see, we have been citing higher lows, and when we connect that, we have this whole structure mapped out. So I would thicken this a little bit so that we can see things. I will give it a red color so that it's bright enough for us to see. So price action, I've been finding higher lows here, making it look more bullish at this point in the market. So things are looking very bullish right here. So we want to get ready to buy this one. So if we are going to be buying the XRP, we want to have its right bar stop order above the 0.47. So we have a buy breakout retest, and if we do have a retest of structure with enough buy pressure above that level on our lower time frame, it will be giving us more opportunities to add more position to our existing trade. So this is how we are going to be buying the XRP for today, and using that trend line, that red trend line, we shall be using it to guide this bullish momentum all the way to the upside. So we have two key structures we are going to be using to guide our trading activity on the XRP, and the first one is the bullish trend line here, which I just am highlighting right now. So it's very important you mark this out on your charts so that you can use it as a guide. So as long as price action remains above that trend line, we want to look out for buying opportunities. So we need a breakout of this key level, which has been a strong selling niche, to confirm the validity of this bullish trend. So a breakout retest should give us an opportunity to buy, and please note that there is a chance that price will still come back to retest the trend line to incite another wave, which will definitely welcome more opportunities to buy the XRPUSD. Now, with the situation here, after identifying this, let's take into consideration the potential sellers to have in this market. Now, for us to sell, since we already have a key level, a key trend line, which is this one, we want to see the trend line breach to the downside for us to start considering selling. And if I'm going to be selling, I want to see price action break down the trend line to the downside. And in fact, we want to have a level which we are going to be using to guide that sell momentum. So we have something at the 0.448. So I'm going to give this a pink line. Let's give it a pink color. And I have it at 0.448. 0.448 level. Give it a pink color too as well. And then here we go. So we have a structure to guide any sell momentum in this market here. So we're having a breakdown retest, welcome selling opportunity here. So what this simply means is that if price action breaks down the trend line, it will also break down the 0.448, and if this happens, we want to be looking out for selling opportunities in this market. So that is how we are going to be trading the XRPUSD. So we have a range already. So our center of focus right now is between the key level at the 0.47 and the support line here at the 0.448. So to buy the XRP, we have agreed that we are going to be looking out for buying opportunities above the breakout retest of that structure to join a bullish momentum to the upside. And if we are going to be selling, then we need to see price action break down the trend line retest of structure to give us an opportunity to sell to the downside. So it's a simple setup we have here. Mark this out on your screen, screenshot my screen if you want to, and use it as a reference point to guide trading activity for today. And it's on this note I want to call it a day here. It has been a wonderful moment. We were able to treat, I think, about 6 instruments today. We treated the USOil Spot, the US Tech 100, the USDJPY, the XAUUSD, the XAGUSD, and of course the XRPUSD. So it has been quite an opportunity here. We have quite a lot of opportunities to take advantage of during the New York session today, and I'm very confident that we are well equipped to be able to take advantage of any opportunity, as we were able to simulate all the potential moves that could happen based on the current structures we have on all the instruments we have been monitoring since the beginning of the week. And it's on this note I wish you best of luck during the New York session today, and I also wish you a merry and happy weekend. And I simply look forward to seeing you same time on Monday, 10 a.m. UTC, 11 a.m. West African time, as we come here again to start the new week on a fresh note. Do have a wonderful weekend, everyone. Bye-bye.